Hey everyone, welcome back to Peter Meow Crypto Analyst. Before we begin, quick disclaimer, this video is for information and entertainment only. It is not financial advice, investment advice, legal advice, or tax advice. Crypto is risky, volatile, and sometimes behaves like a cat on espresso. Always do your own research and make your own decisions. Now let's talk about Ethereum. Recently, Ethereum has been sending the market some very mixed signals. On the surface, things look uncomfortable. Important people are leaving the Ethereum Foundation. David Hoffman, one of the most recognizable Ethereum voices from Bankless, reportedly sold his remaining ETH, and the Ethereum Foundation has long faced criticism for selling ETH to fund operations. So people are asking, is Ethereum in trouble? Are the true believers giving up on ETH? Or is this just Ethereum going through a painful transition? Let's start with the Ethereum Foundation departures. This is not just random staff turnover. We are talking about people connected to core developer coordination, protocol research, public goods, and Ethereum's long-term roadmap. Names like Tim Bako, Barnabé Monod, Trent van Epps, Carl Beek, Julian Ma, Josh Stark, and others have all been discussed in connection with recent exits or transitions. Tim Bako, for example, was not just some guy in a group chat. He played a major role in coordinating Ethereum core developer calls. Think of him as part project manager, part traffic controller, and part therapist for a very complicated decentralized machine. That work is not flashy. Nobody launches a meme coin called Core Dev Meeting Coin, but it matters. So when several important contributors leave around the same period, the market has every right to feel nervous. This is not just FUD. It is a real concern. Ethereum's strength has always been its engineering culture, long-term thinking, deep research, and public goods mindset. If coordination weakens, upgrades could slow down, priorities could become unclear, and the foundation could look like an organization that holds too many meetings, sells too much ETH, and still asks everyone to stay calm. That is the first layer of negative sentiment. The second layer is David Hoffman selling each. David Hoffman is not an Ethereum co-founder. He is not an Ethereum co-founder, but he has been one of the most visible Ethereum narrative builders. Bankless helped tell the story that ETH was the internet bond, the asset of decentralized finance, and the money of an open financial system. So when someone like that sells his last ETH, the emotional impact is real. It is a bit like the owner of a steakhouse telling you every day that steak is the future, and then you catch him eating sushi across the street. Does that mean steak is dead? No, but you are definitely going to raise one eyebrow. The third issue is the Ethereum Foundation selling ETH. To be fair, this is not new. The foundation needs money to operate. It needs to pay for grants, research events, security, ecosystem support, and long-term development. Selling ETH is not automatically evil. In a bull market, people say smart treasury management. In a bear market, people say insiders are dumping on us. Same action, completely different emotional reaction. And right now, ETH sentiment is fragile. ETH has been weak against Bitcoin. Layer 2s have absorbed a lot of activity. L1 fees and burn are not as exciting as they were during the ultrasound money era. So investors are asking one painful question. If Ethereum succeeds, does ETH necessarily succeed? That is the real issue. Not whether Ethereum is useful. It clearly is. The issue is whether ETH holders capture enough of that value. But if we stop here, the story becomes too bearish. Because while the front stage looks messy, something very different is happening backstage. Major players are quietly building around Ethereum. First, look at BMNR, Bitmine Immersion Technologies. It has become one of the most important ETH treasury companies in the market. When a company deeply ties its balance sheet to ETH, it is not just buying a little crypto and posting GM on social media. It is making a serious bet on Ethereum's long-term value. That gives it a strong incentive to support Ethereum's ecosystem, narrative, and public goods. If Ethereum has a long-term problem, these companies are not spectators. They are sitting in the splash zone. Next, look at BlackRock. BlackRock's BUIDL Fund is one of the most important examples of real-world asset tokenization, and it was originally launched on Ethereum. That matters. It means the world's largest asset manager is not just writing "blockchain is interesting" in a report. It is actually moving parts of finance on-chain. Then look at JP Morgan. JP Morgan has been exploring tokenized funds, on-chain settlement, collateral, and blockchain-based financial infrastructure. Again, this is not just conference talk. Traditional finance is slowly moving pieces of money markets, settlement, collateral, and fund infrastructure toward blockchain rails. Then look at Coinbase. Coinbase is not only a major exchange, it is also behind Base, one of the most important Ethereum Layer 2 networks. Base is not a side project. It is Coinbase building a major commercial district on top of Ethereum's settlement layer. And beyond that, there are Fidelity, Franklin Templeton, PayPal, Visa, Securitize, Robinhood, SharpLink Gaming, and many others. A whole group of heavyweight players are quietly paving roads in different corners of the on-chain economy. Some are under the spotlight. Others are still laying pipes underwater. They may not all directly fund Ethereum development. They may not all publicly say each to the moon. But if their businesses increasingly depend on tokenized assets, stablecoins, custody, settlement, trading access, and DeFi infrastructure, they all share one basic interest. Ethereum should remain secure, stable, open, and reliable. So Ethereum today is full of contradictions. On the front stage, you see key people leaving, ETH believers selling, and the foundation getting criticized. Backstage, you see BMNR becoming an ETH treasury monster, SharpLink Gaming making big ETH bets, BlackRock building BUIDL, JP Morgan exploring on-chain finance, Coinbase scaling Base, and Wall Street watching tokenization very closely. It is like a restaurant where the front manager just quit. Loyal customers are complaining outside. But in the kitchen, a Michelin-level team just walked in. The suppliers upgraded the ingredients. And a few billionaires are asking about franchise opportunities. Is it risky? Yes. Is it hopeless? No. And here is the key point. I am not too worried about Ethereum running out of development funding in the long run. Why? Because Ethereum is no longer a small project living off one foundation's treasury. It is now a core network for stablecoins, DeFi, Layer 2s, tokenized assets, on-chain settlement, institutional finance, wallets, custody, infrastructure, and financial applications. The players around Ethereum have money. More importantly, they have incentives. If Ethereum's core development, client diversity, security research, and public goods are not funded, the damage does not stop at the Ethereum Foundation. It affects the entire commercial ecosystem built around Ethereum. So even if the Foundation's ETH treasury becomes much smaller one day, Ethereum development does not suddenly starve. The real question is not, is there enough money? The real question is, how does the money enter the system? Does the Foundation keep selling ETH? Do BMNR, SharpLink, Coinbase, Layer 2s, stablecoin companies, RWA platforms, BlackRock, JP Morgan, and others support development together? Does funding move through Protocol Guild, public goods funds, client teams, security grants, and research programs? This is not just a funding question, it is a governance question. Ethereum can probably find sponsors, but Ethereum cannot casually let one sponsor become the boss. If BlackRock directly paid Ethereum Foundation salaries, the community would immediately ask, is this still the Ethereum roadmap, or the BlackRock roadmap? If BMNR directly funded core developers, people would ask, is this public goods funding, or treasury company price support? That is why the healthier model may look more like the Linux Foundation. Linux is a great comparison. Linux is not owned by one company, but it is used everywhere. Servers, cloud computing, Android phones, routers, cars, supercomputers, and countless embedded systems. Linux is like air in the tech world. You may not see it, but you are breathing it all the time. The Linux Foundation model is interesting because major companies help fund open source infrastructure, while the Foundation provides neutral coordination, legal structure, project governance, events, training, and ecosystem support. Developers come from many different places. Many are paid by companies, but the code still goes through open review, maintainers, and community processes. That is the lesson for Ethereum. Public infrastructure can be funded by big companies, but it cannot be controlled by one company. Ethereum could follow a similar path. BMNR, SharpLink, Coinbase, Layer 2s, stablecoin companies, RWA platforms, exchanges, ETF-related institutions, BlackRock, JP Morgan, and others could all become contributors to Ethereum public goods. But money must not become control. The ideal structure would be multiple contributors, transparent funding, independent public goods funds, support for protocol guild, client teams, security audits, research grants, and non-EF contributors. Most importantly, no sponsor gets to dictate the protocol roadmap. In simple terms, you can help pay for the road, but you do not get to turn the public highway into your private parking lot. If Ethereum can make this transition, today's bad news may become part of a painful but necessary evolution. The old ETH story was simple. The foundation holds ETH. ETH goes up. The foundation has money. The ecosystem grows. But that model has a problem. When the foundation sells ETH, the market panics. When ETH falls, the foundation's treasury weakens. When the treasury weakens, the market worries about more selling. That is an emotional meat grinder. The healthier future model is different. Ethereum becomes a global settlement and application layer. The businesses that benefit from it help fund public goods. And ETH captures value through gas, staking, collateral, settlement demand, monetary premium, and institutional adoption. That is the shift from the foundation era to the public infrastructure era. Of course, risks remain. If key people keep leaving, foundation reform fails, Layer 2s absorb value without enough return to ETH, and ETH cannot rebuild its monetary premium. Then the market will keep asking, can Ethereum succeed while ETH underperforms? That is a serious question. But if Ethereum turns this crisis into a governance upgrade, brings institutional money into public goods funding, and creates a stronger feedback loop between Layer 2s, exchanges, tokenized assets, stablecoins, treasury companies, developers, and ETH holders, then the story could evolve. ETH may move beyond the old ultrasound money meme and become something bigger. The Linux of open finance. Linux did not win because one company owned it. Linux won because everyone needed it, but no single company controlled it. If Ethereum can reach that stage, it may stop being just another crypto project. It could become the operating system of internet finance. So here is my conclusion. In the short term, Ethereum looks messy. The foundation departures are real. David Hoffman selling ETH hurts sentiment. The foundation selling ETH makes investors uncomfortable. But long-term, Ethereum may not be collapsing. It may be evolving from a foundation-driven idealist project into a global public infrastructure, maintained by institutions, developers, users, Layer 2s, treasury companies, and financial platforms. That path will not be clean. There will be arguments, panic, memes, sell-offs, dramatic tweets, and at least 5 people calling it the end of Ethereum every week. But that is crypto. Sometimes when everyone thinks a project is dying, it really is dying. And sometimes it is just finally growing up. Ethereum's question is not whether it has a future. The question is whether Ethereum's success can once again become ETH's success. If that loop is rebuilt, today's fear may become the loud background music before the next chapter begins. That is it for today. Thanks for listening. If you found this helpful, please like, subscribe, and share. And let me know in the comments, do you think Ethereum is collapsing or evolving? See you next time, and as always, keep thinking before the market thinks for you.